Well, I think following up on your Led Zeppelin analogy, I think a whole lot of love might be one way of describing them.
Like it.
Those concerts in 1973. So,
Perfect.
yeah. So I think I think what's been happened is that they have decided to go through with the QE and end of the QE program, but then they've strengthened the forward rate guidance, right? So they've told us that almost through the end of Draghi's term, which I believe is October of 2019, we're looking at a rate structure that's going to be relatively stable. Now, from an investment perspective, I think you have to ask yourself about peripheral valuations and German Bund valuations. Clearly, it makes Bunds look a little bit more attractive because the base rate is not going to change. But from a peripheral perspective, and Draghi went out of his way yesterday to try and dismiss kind of political noise, if you will, suggesting it was kind of the norm, which is fair enough. To me, though, peripheral spreads still look very tight in that environment, even if the base rate is so low, because the quantum of QE, right, the amount of bonds, as he mentioned in the press conference, they bought 3 billion Italian bonds last month. That's a big number, even in the market that as big as Italy.
Scott, can I ask a very, very basic question? What happens to those peripheral bonds if the ECB isn't buying? And I'm going to caveat that with almost the opposite question. The ECB will be buying, won't it? Because it's reinvesting as well. So I guess we need to look at the maturity of the holdings to work out when there'd be a heavy reinvestment phase from the ECB.
Yeah, it was interesting. He seemed to suggest that they couldn't figure out what the reinvestment program, but obviously you know exactly what the reinvestment program is. I mean, I think his stressing the reinvestment program is about emphasizing the bullish or the more dovish parts of the announcement, right? That's something that's been going on. It continues going. It goes on in the UK. I mean, it's not an exceptional process. What I would say is, if you look at a chart of holdings of European government bonds more generally, there's a big movement from private investors to the ECB, right? I mean, that's very clear. And so, to your question specifically, as the issuance keeps coming and the ECB is not there to buy, you would naturally expect there to generally be a widening. Now, obviously, what they're trying to do is keep rates low enough so that portfolio managers like myself say, okay, well, you know, I don't want to own bonds at minus 50 basis points. I'd rather own Portugal at minus 15 and make that switch. And I think that'll be harder to do with the supply-demand dynamic shifting.
Can we get into the gaps that exist now between policy settings here in Europe versus the United States? And the language yesterday from the ECB was around growth, which it revised lower at 2.1%, down from 2.4%. So it's talking about normalizing policy while growth rates are coming back, not exceeding its forecast. Quite different to the United States, where the Fed is hiking because growth is strong enough to be able to hike at this point. What do you make of the split that exists between the two countries, and whether you'll see that we'll close the gap on growth again, and whether central banks can come closer together on policy at some point in future?
No, it's a very good question. I mean, I think it's a difficult question. I think the first thing to note is that even at 2.1%, European growth is pretty strong relative to kind of what we would expect, you know, normal economic growth to be. So you can't necessarily look at the numbers and say they have to be the same. But by the same token, it's pretty clear that the U.S. economy both is relatively outperforming, but I also think that we need to remember that this huge fiscal stimulus is coming, right, in the form of tax cuts and other, you know, and other stimulus spending. And so for us, you know, it is about the relative growth. The U.S. economy has a higher potential growth than the European economy, and actually I get a lot of questions about why that structurally is, and that goes back obviously a long way. But what I would say is that I would expect the European economy to do well, but I would also suggest that the U.S. economy, the kick it's going to get from the fiscal and tax stimulus is going to be pretty significant.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.